As we shared on the daily financial news this morning, we have a big week ahead. We've got roughly 35% of the S&P 500 reporting earnings, including big tech names. We have a Fed meeting and Fed rate decision, plus a press conference. We've got Trump and President Xi meeting to see what happens with tariffs. And why not throw in a government shutdown in the mix? We're going to talk with Taylor from Life Goal Investments, a 12-year Wall Street veteran, and ask him what he's looking at. So, Taylor, lots of stuff this week. What do you got?
This could be an absolutely monumental week for the market. There's so many market movers all packed into one week. This could be the most exciting week we have all year.
Wow, that is saying something. Well, where do you want to start? You want to start earnings, Trump? Where do you want to start?
Let's start earnings. I think that, that is at the end of the day what drives the stock market. And that's what's driven the stock market higher this year. Earnings have continued to surprise on the upside. And it's been exclusively, I would even say the economy has been exclusively dependent upon AI spend.
Yeah,
And
the capital expense from AI.
yeah. And this week we're going to get a view behind the scenes of the biggest and baddest AI spenders there are. We got Microsoft, Meta, Apple, Google, and Amazon. All five.
All fireworks. Again, what we've seen from these big names the last several quarters, if not 8 quarters, is just more and more spending. Are we kind of expecting the same? Are we expecting one of them to maybe say, you know what, enough is enough? What's going on?
I think if one of them says enough's enough in more harsh terms, right? I think that will see a deflation of the stock market. And that doesn't mean like bubble pop boom and all of a sudden we go down, 40% or something like that. No, but the stock market is riding the coattails of the AI boom. If you look at pretty much anywhere else in the economy, you can't show the signs of life that would correspond with the reaction we've seen in the stock market. You have folks like Zuckerberg saying the risk of underspending is far more than the risk of overspending. So if all of a sudden any of those revert back on, hey, we're just not going to continue to pile another 40 billion next quarter, each of them into AI build out, it's tough to see the economy continuing to chug along and the stock market continue to chug along on that news.
Well, I guess I get that, and likely you're right. But also, I step back and look at this. Eventually, somebody's got to cry uncle, right? And while all of these folks are printing money, they have very cash, intense businesses. It can't go on forever, right? And one could argue that the return on capital already spent hasn't been great.
Oh, it's de minimis. Right? There's no return on capital already spent. No. This is a hope and a dream, Michael. Get on board.
Come on. It's a .com era, with new things. This is so, there are so many similarities between the .com era and the AI boom. And, I rode the .com boom up and down, right? So I turned $7,000 into 200 only to go back to 40. And so I remember that era, and it feels a lot like the same thing. It's just with different names, different tech, different vocabulary, different promises. And, so far, just spend, baby, spend.
Michael, this time's different. Don't you know that? No, I think in reality, like there's a natural S curve to any evolution of a major change in the way business is done. Where S curves are higher, there's a ton of spending, and you have follow through by stocks going upwards during that S curve, and then they hit this point of, okay, the technology actually takes a while to produce profits, and investors just get impatient, and you have the stocks come flying down. And then what happens is you hit this bottoming point, and what happens there is investors start to discern the difference between, okay, everybody that says AI on a conference call has their stock absolutely rip, and there is going to be some wheat and some chaff here, and they're going to start to discern the difference between the two of those. And that's where the S curve goes from, we're up now. You're going to see some deflation at some point. We don't know when that'll be based on the fact that profits just aren't following through, and they won't anytime soon. And then there'll be that bottoming point where, okay, these are the winners, these are the losers, and the winners revert back upwards.
Yeah, I think that makes a lot of sense. So the question is timing. Anything, you got any spidey senses that one or a couple of them might hint at less spending, or is it just kind of rinse and repeat more and more and more? What's your sign for the week?
I think that the highest likelihood is that all of them, could one miss or not, or disappoint a little bit? Yes. But I think in the totality, I think all of them report well. And I think the stock market continues to move up. But with that said, if you get a pullback by any of them on
it's just
CapEx
one.
spending,
Yeah,
you
it's
get
one of them.
meaningful downside. So I think to frame this more bluntly, I think the more likelihood of the path this week is higher in stocks. But if it's lower, the lower is a lot more meaningful than the higher is.
Yeah, I think that's well said. And another thing you put out on your Instagram feed, which if you're not following Life Goal Investments on Instagram, you're truly missing out. I was surprised which of these big tech names was the worst performer over the last 5 years.
Yeah.
Right.
Well, I was surprised. I think most people would be surprised that any of them, the Magnificent Seven, have underperformed. That's possible. Yeah. So, I did a video and at the beginning I said something like, hey, there's going to be a quiz on this. Like if you look at those big 5 names that we just talked about there, Microsoft, Meta, Apple, Amazon, and Google, which one has not been a good performer over the past 5 years? 4 out of the 5 have meaningfully outperformed the S&P 500. Amazon has done about half of what the S&P 500 has done over the past 5 years. Yeah. And what I also thought was really interesting, and I said this in the video, I said that also coincides pretty perfectly with when Bezos stepped away from Amazon. So all of a sudden it becomes, is Andy Jassy Jeff Bezos?
Right. Yeah.
Which are big shoes to fill.
Yeah. And it didn't hurt that Bezos was also selling a bunch of shares, which includes the float, I'm sure.
Totally.
He's taking in billions. Well, let's switch to Wednesday. We've got the Fed rate decision. I would argue that 25 points is coming no matter what, a cut of 25. But again, like last time, just 6 weeks ago, it's all going to be about Jerome Powell in front of the microphone, right? Again, we cut last time. Rates, the 10-year dipped below 4% for about 10 or 12 minutes, and then bingo, bango, Powell gets the microphone and it rips higher. Are we going to get a rinse and repeat of that or what?
It's going to be interesting because he's got himself in a little bit of a pickle right now, right? Let's call a spade a spade. But it's the difference between the visible and the invisible right now on the dual mandate. So the visible is the side that we are seeing inflation data, and they put out inflation data last week, and it showed
5 months in a row. Yeah.
5th straight month of increase, and it hit that kind of mental threshold of 3%, which is going further and further away from that Fed's 2% target. So all of a sudden their dual mandate, stable prices, is coming into question. And then the other side of the
let me ask you about that before we do jobs. One of the things that's always bothered me, and I haven't done this for several months, but I just did it for this month. You know this, but to catch the audience up, shelter is the biggest single component of headline inflation, which was 3%. It was reported in the latest report that shelter inflation was up 3.6%. However, if you actually look at actuals, like on the ground, single family homes are up 1.7% and apartments are down nearly 1%. So, wash, we're up like 0.5%. So
did you pull any hair out? Did you pull any hair out on this where you're like, come on, guys, this is just not factual. It's not reality.
Yeah, exactly. So I actually corrected for the math, right? If instead of saying 3.6, which is what they reported, and you actually said 0.5, right? So the delta is 3.1. We actually don't get a headline of 3%. We get a headline of 2%.
Yep.
It's just that simple.
And I think that you look at the Case-Shiller Index, which is the Case-Shiller Index is the de facto for what home prices are doing around the United States. That's down sequentially 5 months.
Yep. Yeah.
So you're not wrong. It's hard to make the argument that they aren't blatantly wrong.
Yeah. Just so wrong. And again, if you wanted, at some point I look at this and go, guys, don't you want to declare victory? Isn't that like the goal of this whole, you've missed the 2% inflation by 5 years. You've been wrong for 5 years. Just change this calculation and say it's time to get actual data, and bingo, bango, we got 2%. I don't get it. It just
don't they know who our maestro is? Don't they take any notes from Mr. Trump himself? You can doctor this stuff if you have to. You got to know how to sell this thing.
Sell this thing. Yeah. Well, okay. Go back to jobs before I interrupted. Labor.
Yeah. So we were just talking about the visible versus the invisible. The invisible is the justification for cutting, and the invisible is the fact that jobs data doesn't get published when the government's shut down. Yeah. And so now we have this kind of in the backdrop, we continue to believe, and there's some private payroll data that's coming out and it's not pretty. So that justifies it, but we don't get the official data that justifies our jobs markets weakening. And thus very good reason for cutting. So now he's going to have to stand in front of the microphone and tell them exactly what data he's pulling on to justify this cut in the face of 5 straight months of inflation moving away from the target.
Yeah. Yeah. Well, again, I think, I think a 25% cut is there, or 25 basis point cut is coming. I did find it interesting. I don't know if it's still true, but as of last week, one of the betting markets had overwhelming odds that we were going to get 75 basis points in cuts this year, which means we get a quarter here and 50 in December. Is Wall Street seeing the same things, or was just some wild betting market not knowing what's going on?
Well, 70. So we got a rate cut, and then we're going to get one now. So that would just mean one more, right? Another
no, 75 after.
Okay, 75 after. Gotcha. Yeah. Wow. That'd be
a lot,
very
right?
shocking to the market, I think. I think there's a chance that we're staring at kind of a similar environment that we were in last fall, actually, where you actually had the economy by some signs showing the reverberation back upwards. And them cutting in the face of that. So you saw that last year, and then there was that big argument that was politically motivated in the fact that the Democrats wanted to kind of not have Trump move into office and have Kamala or whatever. But I think that there's a chance that we start to see a little bit of signs of that showing through, and therefore I think that a December cut is actually more on the fence than the market thinks that is right now.
I would agree with that as well. I think, if I had to take the over under, I think no cuts probably, again, as of right now, more likely than a 50, right? I think a quarter's coming in December.
Oh, I would put a lot of money if the bet was, is it going to be 0 or 50? I would put a lot of money on 0.
Yeah. Those were the two choices. Yeah.
Yeah. But a 25 basis points cut in December is all but a certainty based on the betting markets right now.
Yeah, I agree with that. Well, let's move to topic number 3. I think it's missed by a lot of folks, but I think it might be the most consequential thing, and that is President Trump and President Xi getting together and taking what appears to be a architecture of a deal and signing one. I think getting this behind us, taking off the 100% tariff, which goes into effect November 1st, getting trade between our two countries, soybean and all this other stuff kind of functioning again, I think would be a great relief. I think the market is reacting to that here Monday morning, but I think Thursday when those two get together could be pretty consequential.
Yeah, I think it could. I think it absolutely is consequential for some areas of our economy, right? Farming has been one that's been absolutely smoked, and China and Xi, they're not stupid, right? So they know that Trump's base, like farmers, 78, and I don't know how clean this data is, but 78% of farmers was the data that I saw voted for Trump, right? So they went right after one of his most loyal bases and said, listen, we're just not going to buy a bushel of soybean from you guys until you correct this. And they haven't. They literally haven't. And so you have this massive dip in soybean prices, and the farmers are kind of taking it on the chin, right? The Brazilian farmers are happy about it because that's where all the soy purchases have gone from China. But yeah, I think that at the end of the day, the whole buy the rumor, sell the news, if they sign it on Thursday, I think that the movement higher in stocks is today that we're seeing right now. I think that by the time Thursday rolls around, if they actually fruition us, which is what's based on today's movements, it's probably an event.
Yeah, very cool. Well, let's get to the last one here. We're still in a government shutdown. There was hope it would end after No King's Day. That did not happen. There's hope that it might end before November 1st when SNAP benefits don't get sent. I'm still in the camp, like I've been all along, that this is going to set a record, and that's is this government shutdown have any signs of closing?
Not that I could see. No visible ones. That's for sure. It's interesting because you have now Bessent stepping out and saying that November 15th.
Taylor, you still there, buddy?
Yep, I'm here. I'm here.
All right. Government shutdown. What do you think? Is it going to end this week?
No, I don't think so. I don't think there's any real visible signs of any coming together. And you have Bessent stepping out and saying now that November 15th, like, we're going to stop paying our service members. We're going to be able to afford to pay people that are putting their lives on the line to protect ourselves. I think that causes enough scurry because it is just so disingenuous by anyone in Congress to say, hey, we'll continue to be assholes and not pay our military and not come to terms on this, because that's what you're doing.
Yeah. And again, I think it's 5 or 6 Democrats to vote for the clean CR, and this thing gets open and we start, negotiating all the other stuff. So I think the SNAP benefits ending on November 1st is going to be a red line where the volume of frustration really goes up.
Rhetoric picks up. No doubt about
Yeah.
it. I totally agree. And I'm not right, I'm not left. I throw stones very hard at both directions, but I just don't see the Democrats coming out of this with very rosy smelling cologne on. I think that they're the ones that are going to bear the brunt of this.
Yeah, again, it's a lot of exciting things happening this week, folks. Let us know in the comments below. What are you looking for? Tech earnings, Fed meeting, Powell discussion, President Xi, President Trump, or the shutdown? Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on Instagram and TikTok doing daily videos.
Thank you, buddy. Take care.
Thank you.